everybody, welcome to the Basis Points Podcast. I'm Kevin Flanagan, head of fixed income strategy at Wisdom Tree Asset Management. Money in motion, part 2, playing along directly with Fed rate cuts. Well, it certainly has not been a slow start for the dog days of August in the money and bond markets. You know, we had the combination of a dovish Fed Chairman Powell post-FOMC presser and then cooling labor market setting, providing more fuel for Fed rate cuts. In fact, post the jobs report, the debate's no longer centered around the number of potential easing moves for the remainder of this year, but rather how large they could possibly be. And that brings us to part 2 in my Money in Motion series, how to play along more directly to Fed rate cuts. But before we get to the solutions part of this podcast, let's go for some insights first. Interestingly, there's a belief that whatever happens to the Fed funds rate will then be passed along to the Treasury yield curve in a similar fashion. Now, directionally, Fed funds and Treasury yields moving up or down in tandem is somewhat accurate, but the magnitude and timing of changes tend to be not so straightforward. And obviously, one begins with the Fed funds target range, which represents overnight money. So as a result, the closer the maturity is to Fed funds, the more positive the correlation is going to be. And what you can see is over the past 25 years, looking at the midpoint of the Fed funds target range, the 3-month T-bill, and the 2-year and 10-year Treasury yields, we do have some fluctuations here. And remember, Treasury floating rate notes could also be considered in this analysis, given the fact that it floats or it's referenced to the weekly U.S. Treasury 3-month T-bill auction. And as you would expect, the correlation between Fed funds and the 3-month T-bill is extraordinarily tight, while the relationship with the 2-year note is also very positively correlated. Now, that positive correlation does, though, begin to lessen considerably the further you go out on the yield curve. So, you see it in the spread between Fed funds and the Treasury 10-year note. Now, directionally, the two rates do tend to move in a similar way, but the correlation is noticeably lower when you compare it to maturities that are more closer to Fed funds. And intuitively, this makes perfect sense. A maturity structure that's not too far removed from the Fed funds rate will be anchored and directly linked to trends in overnight money thinking, right? Fed rate hikes, or in this case, Fed rate cuts. But as you continue to move away from this anchor, other factors besides the Fed begin to come into play. And so investors demand a term premium or an additional return or yield for that potential risk incurred by holding a security that is more longer term in maturity. And in addition to that, inflation and future economic expectations also play a visible role on this front. So market talk for a 50 basis point rate cut from the Fed in September is now increasing. And based on Powell's comments post-FOMC and the policy statement, what I would say is that this is the type of report the Fed needed to first confirm a cut of any kind, not necessarily how big it's going to be. This puts Powell's Jackson Hole appearance, which is scheduled for August 22nd through the 24th. Not quite sure what day he's going to speak, but it puts that appearance squarely in front and center for rate cut forward guidance. And now, rate cuts are definitively a base case scenario, right, for all intents and purposes. What they ultimately look like is going to remain a fluid consideration. So let's get to the solutions. And against this backdrop for rate cuts, Wisdom Tree offers 2 solutions that investors can utilize to take advantage of this scenario, and they should be very correlated to changes in the Fed funds trading range. And for investors who would prefer more of a pure rate play, and focus only on U.S. government securities, treasuries, we would recommend considering a solution in our Treasury suite of funds, the Wisdom Tree 1 to 3 year laddered Treasury Fund, ticker USSH. And for investors who are looking for some additional yield in a quality screened investment grade strategy, and you wish to keep duration around 2 years, we would recommend considering the Wisdom Tree U.S. Short-Term Corporate Bond Fund, ticker there is QSIG. So I'm going to end it there. Certainly, summer here is going to continue to be filled with headlines, I think, for the markets as we continue to figure out what the potential rate cut scenario is going to look like starting in September. But I'm going to sign off from here. Hope everyone has a great rest of the week and be well. And before investing, Carefully consider a fund's investment objectives, risks, charges, and expenses contained in the prospectus available at wisdomtree.com/investments. Read it carefully.